Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Okay, anything said in this piece is for media publication only. It's not investment advice or financial advice. Now, remember, driving markets is raw material. It's not edited. It's not studio driven, even though I do some studio productions and still call it driving markets. It's just raw material. It's not edited. It's very much as it is, in your face, hard facts. Now, obviously, it's an opinion based on my opinions, and I could be wrong. Most of the time I am wrong, but it's just giving the opinions out there and it's being very direct to the point. There's no motivation. I'm not slanting you in any particular direction. I'm giving to you as it is, an overall market wrap, and there's no ulterior motive. So hopefully it will give you the benefit of having something real out there. There's millions of YouTube videos and millions and tens of millions of Instagrams and TikToks, and hopefully driving markets will fit in there and be a little bit different from the rest of them, stand out, and hopefully we'll build up the subscription. So let's kick off. Yesterday, the CPI, the Consumer Price Index, came in slightly lower than expected in the US. We're talking about the US now, okay? Came in slightly lower than expected, and that gave a massive boost to markets. What actually happened is that the Dow went up nearly 900 points within a few minutes. It was incredible, and then came off 900 points, and was one moment during this trading cycle, it was down, ended up closing up on the day. So there's a lot of energy there and a lot of toing and froing, because no one really knows which way the markets are going, which way inflation is going, even though it was a good indication. I personally believe, and I'm saying this for the fact that for this on YouTube, on driving markets, that I believe inflation in the States is going to be in double digits by March. So I'm putting my neck on the line there, and I'm saying double digits by March. Everyone's going to say, but why? What's going on? Why are you saying that, Mayor? No, let's just call it 100%. The reason why I'm saying it, because there is an undercurrent of demand. There's an undercurrent of inflation there. There isn't the supply chain. There's full employment, and everything really looks hunky-dory as far as the overall economy is concerned. However, there is couple of factors that may impact it. Number one, there is a slight rising in unemployment in certain sectors, especially in the high-tech sectors, where they're laying off people because all this dead wood that they've attracted over the years is being completely flushed out. The leader in that is Elon Musk. He's great. He's getting rid of all of these completely flip-flop t-shirt driven short guys who just walk around drinking cappuccinos and espressos all day and talking absolute load of BS. So it's a complete, get rid of those individuals. Meta's got rid of them. Amazon's got rid of people. Netflix got rid of people. Google's got rid of people. That's just in the high-tech sector. Not talking about also the other sectors which are being impacted. That might taper inflation in 2023. But if we're going to continue having full employment in 2023, then you can bet your bottom dollar that inflation is going to go higher. So be prepared for that. Looking very short term, which are the last few weeks left of the year, you're probably going to have a market rally, which is what you're seeing at the moment. For equity markets and financial markets are going to rally up towards the end of the year to make the numbers look better than expected for 2022, and that is going to be the theme of things, and the color of events over the next 2 to 3 weeks. Come January, you're going to have probably a major sell-off of 25-30% in 2023, and it could even happen in the first three months, the first quarter of 2023. You're going to have a big sell-off in equity markets because there's still a liquidity problem, and the companies will not be making the profits. Corporate earnings will not be making the profits that they are deemed to be making in order to support that share price. Now, focusing on a couple of little bits of news. Tesla, Elon Musk, big fan, massive fan of Elon Musk, love him. Tesla's under pressure because they've got issues financing the Twitter deal. The Twitter deal was $44 billion. Has to come from somewhere. And Tesla's under pressure for a couple of reasons. Number one, supply, production is under pressure, but also they're going to have to leverage their stock. They're going to have to take loans out against Tesla stock in order to finance the Twitter deal. Eventually, it will work through. But if you remember, I put a target on Tesla already 2-3 weeks ago. I said Tesla's going to go down to about 150. It's at 160, probably go down to 150. before the end of the year, maybe even 140. I don't think it's going to go lower than that because Tesla is a fantastic business, but it may do, okay? But it's going to be under pressure. That does not mean I don't like Elon Musk. It does not mean I don't like Tesla. I'm just saying it as it is. Tesla has to finance the Twitter deal. The Twitter deal will turn around. Elon Musk will make it into a fantastic platform, but it needs to be financed at the moment. It's put pressure on that. Now, the other one to look at is Apple. Now, everyone says Apple's not going to fall, and Apple this and Apple that. Well, I'm telling you, Apple is going to fall, and Apple's going to go down in 2023 to around about $100 a share. Yes, I'm put my neck on the line on driving markets. You can quote me and can look at it again in a few months' time and see where I'm at. But I'm telling you, Apple's going to go down to around about $100 a share. There's going to be more competition. They're going to have difficulty sales. They've got production problems. They've got innovation problems. Overall, I don't think it's a great company long term. But of course, there's too many investors, including Warren Buffett, have said, well, you're talking about Apple as a fantastic investment. Well, I'm going out of the crown. I'm saying, actually, I think Apple is going to go down. The next one going to go down is Amazon. Amazon's already gone down from where I've stated it was going to go down. And the last one is Meta. Of course, I'm always selling Meta. I'm always saying get rid of it because it's a load of crap. It's going to get into $70 a share, $70 a share. So Facebook Meta is also on the way down. Now, what could happen, believe it or not, Elon Musk could be so successful, he could actually buy out Instagram and Facebook. He does have that ability, but I think he's going to get Twitter under his belt and then go for Facebook. Yes, I believe Elon Musk is going to buy out Meta and Facebook. Sounds ridiculous? Sounds far-fetched? Let's see. Let's see where we're at in 2023, maybe 2024. Elon Musk is going to buy out Facebook and Meta and get rid of Mark Zuckerberg as a complete and utter waste of time. As far as foreign exchange is concerned, the dollar is a little bit weaker. The pound, as I said, is going up. Look at the pound, it's at 123.5 to the dollar. Cable is likely to go up even further to 125, 127. That's on the foreign exchange markets. Euro dollar 106.5. It's creeping up there because of dollar weakness, but there's serious problems in Europe. So you could see in 2023 the euro go all the way down to 90 or 95 to the dollar. Okay, as far as the yen's concerned, the yen's got a very massive support level of 130, 128. I don't think it's going to go below that. That's dollar yen I'm talking about. I don't think it's going to go below that, but keep an eye on it. Who knows? As far as Bitcoin's concerned, again towards the end of the year, there'll probably be a rally and then a massive sell-off in 2023. Cryptos are looking very vulnerable at these levels. Okay, towards the end of the year, rally. Come January, sell-off, and throughout the year 2023 it's going to be a sell-off. Bonds also came down yesterday as inflation came down. That's a good indication for mortgage rates going forward, but the cost of borrowing in 2023 is just going to continue rising. It's not going to go down. So for those who are mortgage holders, be aware of that. That's more or less it. This is Mayor Valensky with Driving Markets. Subscribe, comment, send to friends, share with enemies, wherever you want. Let's get this channel boosted. Let's get it going. Please pass comments and tell me what you want to hear on Driving Markets. Anything specific you want me to get into, and I'll do it. I'm going to do some studio analysis on certain things, and that'll be much longer. That'll be for 20-25 minutes, but that's more for long-term education. All right, have a good day.